So Tongo has a good resource of 8.3 million carats. About 1.1 million carats of that is in a reserve. And that's really only down to 230 meters for the resource, 110 meters for the reserve. And actually, this is only from 5 of 11 known kimberlite ore bodies on the property. And actually, only 3 of these 5 that are in resource reserve are actually in the mine plan currently. And this gives us 18 years life of mine, which is quite significant. So what we've done over the last couple of years is basically construct the surface infrastructure that will support the underground mine, and also start our decline development, accessing the first level of mining, which is about 50 meters below surface. And we actually accessed the first mine faces, I think it was in February earlier this year, and that culminated in our first diamond sale in Antwerp in May, and that gave a very good diamond value of $262 per carat. So it's quite a good value. And what we're finding actually is that our grades from mining, our recovered grades through the plant, and also our diamond values that we've got from the first sale, both are actually exceeding what we've modeled in our resource and reserve plan. So I think that bodes well for the future of the operation as we progress. We haven't put a specific value on it in any resource or reserve. That the compliance doesn't allow for that. But really, what I can say is that of the 8.3 million carats, even if we just take a conservative, let's say $200 per carat value of diamond, it effectively means that under our feet on the project, there's about $1.6 billion worth of diamonds sitting there, and this is down to just 230 meters. You see, so. We think that the ore bodies will go deeper. In fact, we've actually drilled a number of them to 400 meters or below already. So we know that the ore bodies are open-ended at depth. And really, it's just going to be a program of deeper drilling to try and basically extend the resource at depth, and obviously enhance the in situ value, as we call it. We've progressed substantially in the last couple of years since we started our construction. As I mentioned earlier, we've achieved so far over 2,000 meters of decline development and level development that's accessed the first level of mining, 50 meters below surface. And really, it's just a matter of ramping up now. So, as we're going to bring in additional capital, this is kind of the drill machines, the haul trucks, the loaders that go underground. This development will ramp up and basically access more mine faces, deeper mining levels. And, we're only scratching the surface on the first mining level, 50 meters below surface. The resource down to 230 meters gives us 6 mining levels. So we're really just at the start of our journey here, with a long way to go and a long life of mine, as I've mentioned earlier. We're going to be looking to tender our diamonds quarterly, and this is going to be done through a tender house called Bonus Group in Antwerp, Belgium. This is obviously where one needs to sell the diamonds. There's Dubai and there's Antwerp, which is the more traditional center for selling diamonds. And basically, as I say, we're going to be trying initially for a quarterly diamond sale, and I think as volumes increase, diamond volumes that is, we may actually reduce that frequency to every 2 months, but we're not there yet. I think our next diamond sale will be targeted for the first quarter of next year. Typically, that is when the diamond market kind of refreshes, if you like, and sales typically enter the market in the first quarter, and that's when sort of strong demand is present in the market. Targets over the short term, and I call this the next 2 years, is to get Koundou and Lando into what we call commercial production levels. And I think this will, by 2025, be around about 250,000 carats per annum, annualized. And, as these kimberlite, Koundou and Lando kimberlites go deeper and more mine faces are opened, I think by 2028, we're forecasting about 350,000 carats from those 2 ore bodies. Now, in the short term, and I'm talking 2023, next year now, we're going to be looking at bringing Tongo Dike 1 to the table. This is a kimberlite that's located to the east of the existing Koundou and Lando operation. And basically, we'll look to do a feasibility study over the next 4 to 6 months, work out what the CapEx and the OpEx is to bring this particular ore body into the mine plan. And if successful, this will add about 75,000 carats per annum when it's in full swing. Beyond that, we're looking further to the west, and there's a kimberlite that's in the resource category now called Panguma. Now, we only have just less than 1 million carats in resource on Panguma, but this is just down to 100 meters. We're going to do a bit more bulk sampling work, a bit more drilling on Panguma, get the resource to say a 2 million carat level down to 200 meters, and then follow the same exercise as Tongo. That is feasibility study, capex, opex, economic decision, bring that into the mine plan. And actually, based on the grades that we know, the similarity of grades between Panguma and Tongo, we believe that Panguma also can add a further 75,000 carats to the production profile. So I think what we've got here are many levers actually that we can pull to effectively ramp up production, not just from the existing mine faces that we're mining now, the kimberlites, but additional kimberlites on the portfolio. The processing capacity at the moment is small. We're effectively running on our 5 ton per hour sample plant that has been on the project for some time now. We've kind of beefed it up a little bit, but the capacity of this plant is pretty much going to be exceeded towards the back end of 2023. So what we've taken the decision to do is to increase the capacity, or bring rather a new plant in with increased capacity. This will be a 50 ton per hour plant. We've finished the designs for that. We've started the initial procurement, and actually we have a lot of plant components on site already. So this will actually be a fairly quick exercise. I'm talking, 4 to 6 months to construct and commission once we press the button. And this is about a $1.2 million sort of investment. So it's not a massive amount, but what it does give us is the 50 ton per hour capacity is sufficient to handle the production from Kundu and Lando over the longer term. And then basically, as we bring on Tongo Dike 1 in the east, which I've mentioned, that will have a standalone process plant capacity of around about, say, 20 tons per hour. So obviously, as we go sort of deeper into the mine life with Panguma and maybe additional kimberlites, the 50 ton per hour plant is going to be modular. So we'll be able to increase the capacity on that to basically meet the needs of the underground as and when. So the key points for Newfield, I think, we've come a long way in our short mine life on Tongo over the last 4 years. We've developed this resource of over 8 million carats. So it is a robust resource. It's high grade, it's high value. That we've confirmed. Newfield has spent $70 million to date on this, so it's not a startup project. We're kind of way down the line on the development profile here. We have reached our first mining levels. We have sold our first diamonds. And, I'm a geologist. I'm a strong believer that the life of mine that we have at the moment can be significantly expanded through additional resource work, going deeper on existing kimberlites, bringing additional kimberlites of the 5 of 11 I've mentioned before. But let's bring some of the 6 outstanding ones into play here. And, I think we can have a very, very long life of mine with high margins, and certainly with a background of a good, robust rough diamond market. The market is strong at the moment, and I think most analysts agree that there's a long-term supply deficit coming to hit us, and that can mean one thing: higher diamond prices. So I think we're in a good commodity in a good part of the world, and certainly Newfield is well positioned to take advantage.